did Warren Buffett manage to turn inflationary pressures into profitable opportunities, and the secrets behind his strategy for making money during economic uncertainty? Warren Buffett's investment philosophy. Warren Buffett is renowned for his core investment principles, which center around value investing and a focus on long-term growth. Rather than chasing short-term gains, Buffett emphasizes the importance of buying undervalued companies with solid fundamentals. This approach is particularly relevant during inflationary periods, as it allows investors to seek out businesses that can maintain their profitability even when costs are rising. Buffett identifies companies with strong fundamentals by looking for competitive advantages, robust cash flow, and the ability to pass on price increases to consumers. For instance, companies in essential sectors like consumer staples often have the pricing power to withstand inflation. Buffett famously stated, "In a business world, the rear-view mirror is always clearer than the windshield," highlighting the importance of thorough analysis and patience in investing. One of his notable investments during inflationary times was in Coca-Cola in the late 1980s. Despite economic challenges, Buffett recognized the brand's strength and pricing power, leading to substantial long-term gains. His investment mindset encourages us to focus on quality over quantity and to remain steadfast in our strategies, even when the economic landscape shifts. By adhering to these principles, investors can better navigate the complexities of inflation and secure their financial futures. If you are enjoying the video, hit the subscribe button and comment down your thoughts. If you want to explore money-making strategies, click the link in the description to start your financial journey. Investing in real assets. Warren Buffett's approach to investing during inflation often includes a focus on tangible assets, which can provide a reliable hedge against rising prices. Real estate, commodities, and precious metals are prime examples of real assets that tend to retain value or appreciate during inflationary periods. Investing in real assets can offer not only potential appreciation but also rental income that typically rises with inflation, making it a solid choice for long-term investors. Commodities such as oil and agricultural products often see price increases during inflation as their costs rise in tandem with overall economic conditions. Precious metals like gold and silver are traditionally viewed as safe havens, preserving value when currency purchasing power declines. These assets can act as a buffer, helping investors to maintain their wealth. Buffett's investment in Coca-Cola exemplifies his strategy of choosing companies with strong brand loyalty and pricing power. During inflationary times, Coca-Cola has been able to increase prices without significantly impacting demand. Showcasing its resilience, Buffett famously noted that he looks for businesses that can raise prices without losing customers. This mindset not only applies to consumer goods but also underscores the importance of investing in real assets that can withstand economic fluctuations. By focusing on tangible investments, Buffett demonstrates a practical approach to safeguarding wealth during inflation. Dividend stocks as a strategy. In an inflationary environment, dividend-paying stocks become an essential component of a well-rounded investment strategy. These stocks provide a steady income stream which can help offset the rising costs of living that accompany inflation. As prices increase, having a reliable source of income from dividends can offer financial stability and peace of mind. Warren Buffett has long favored companies with a strong history of increasing dividends. He believes that consistent dividend growth is a sign of a company's financial health and its ability to generate cash flow. Companies that can regularly raise their dividends often have robust business models and competitive advantages, making them more resilient during economic fluctuations. Buffett famously stated, "The best investment you can make is in your own abilities," and investing in dividend stocks is a way to leverage that principle. Several dividend stocks have demonstrated impressive performance during inflationary periods. For instance, companies like Johnson & Johnson and Procter & Gamble have not only maintained their dividends but have also increased them over time, even when faced with rising costs. These success stories highlight the importance of selecting quality dividend-paying stocks, as they can provide both income and potential capital appreciation, making them a smart choice for investors looking to navigate inflation effectively. Investing in strong brands. Warren Buffett's investment strategy heavily emphasizes the importance of strong, recognizable brands. These brands often possess significant pricing power, allowing them to raise prices without losing customers, even during inflationary periods. When consumers trust and value a brand, they are more likely to continue purchasing its products regardless of price increases. This resilience is crucial in maintaining profitability when economic conditions become challenging. Two prime examples from Buffett's portfolio are Apple and American Express. Apple, with its iconic products and loyal customer base, has consistently demonstrated its ability to command premium prices. Even during economic downturns, Apple has thrived, showcasing its brand strength and innovation. Buffett has often praised Apple not just for its products, but for its ecosystem, which keeps customers engaged and willing to spend. Similarly, American Express has shown remarkable resilience in the face of economic challenges. Known for its premium services and strong brand loyalty, American Express has maintained its customer base and pricing power even when other financial institutions struggled. Buffett's investment in these strong brands reflects his belief that companies with established reputations and loyal customers can weather economic storms more effectively. By focusing on strong brands, investors can position themselves to benefit from the stability and growth these companies offer, even in uncertain times. The importance of patience. Patience is a cornerstone of Warren Buffett's investment strategy, especially during inflationary periods. Buffett's long-term perspective allows him to navigate the pressures of rising prices and economic uncertainty without succumbing to the temptation of quick gains. By focusing on the intrinsic value of companies rather than short-term market fluctuations, Buffett can make informed decisions that pay off over time. One notable example of Buffett's patience is his investment in Coca-Cola. He began buying shares in the late 1980s, even when the stock faced challenges. Instead of panicking, Buffett held onto his investment, believing in the brand's long-term potential. Over the years, Coca-Cola not only recovered but also thrived, rewarding Buffett with substantial returns. This story illustrates how a steadfast commitment to quality investments can yield significant rewards, even when immediate results are not apparent. For viewers, adopting a similar mindset can be transformative in their investment journeys. Embracing patience means resisting the urge to react impulsively to market volatility and instead focusing on the fundamentals of the companies in which you invest. By cultivating a long-term perspective, you can better withstand inflationary pressures and position yourself for lasting success in the ever-changing financial landscape. Remember, great investments often take time to mature, and patience can be your greatest ally. Diversification strategies. In an inflationary environment, diversification becomes a crucial strategy for mitigating risks and protecting investment portfolios. By spreading investments across various asset classes, sectors, and geographic regions, investors can reduce the impact of inflation on their overall returns. When certain assets underperform due to rising prices, others may thrive, helping to balance the portfolio and maintain financial stability. Warren Buffett has long endorsed the importance of diversification, albeit with a focus on quality over quantity. His investment in Berkshire Hathaway exemplifies a diversified portfolio that includes a mix of industries, from insurance and utilities to consumer goods and technology. This broader exposure allows Berkshire to weather economic fluctuations and inflationary pressures more effectively than a concentrated investment strategy. Thanks for watching, and we will see you in the next video.